Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
G'day and welcome to the COB here at AusBiz. I'm Andrew Gagan. Thanks for joining us. This is where we wrap up the day and the week. And what a negative end to the week it has been. It's Friday the 13th. It is Black Friday, and that is how it's panned out on the local index. In fact, we take a look at the ASX 200. Now, bear with us. We, in fact, don't have any graphics, but I'll talk you through it. It is down 1 1/3%. It's been at that level for the best part of the afternoon. Once again, a trigger certainly been what we saw on Wall Street overnight, with that sell-off continuing in tech stocks, and that's flowed through to the local market. In fact, every sector, pretty much, aside from utilities, that's been in the green, but they are all being affected at the moment. In fact, let's get to some of the further detail. In fact, I'll bring you to the three themes of the day. Unfortunately, we don't, as I said, we don't have those graphics, but I'm calling it Black Friday. Liberals, leaderless, dare I say, they have lost the first female leader of the party in Susan Lee, defeated in a party room vote by Angus Taylor, who is the new leader of the Liberal Party, with his deputy also is new to the position as well, and also inflation expectations. That's certainly a focus on tonight's inflation data out of the States. So let's get to the sectors of the day. Now, I mentioned very few in the green. In fact, utilities was broadly higher, but let's take a look at the how we're sitting across there. The tech sector, that's certainly been hard hit. Once again, we don't have those further details in terms of the graphics for you, but I can talk you through it. Also, the gold miners coming off substantially. We did see the price of gold come off around 3% overnight. It has lifted since then. It's sitting around $5,000 an ounce. And elsewhere, we are taking a look at, well, I mentioned the banks because we had Westpac reporting today. Now, we've seen results this week from CBA and from ANZ. They were rewarded in terms of the share price moves there, having hit new profits. Look, similarly, we did see a positive result from Westpac today, but given the broader market sell-off we're seeing, that has been dragged lower, about 1.5% in fact. That said though, ANZ is actually 1% higher, so that appears to have bucked the trend. Now, we are going to speak to Shane Oliver from AMP very shortly. In the meantime, let's check in with our stock of the day. It was Pro Medicus. It came out with its results yesterday. It was sold off heavily. Well, let's get some analysis. We heard from our experts, Luke Winchester from Mary of the Capital and Claude Walker from A Rich Life.
If I did not own any shares in Pro Medicus right now, what I'd be thinking right now is that I want to buy shares in this stock during the current sentiment drawdown, because I basically think that the idea that artificial intelligence is going to damage the business of Pro Medicus is just wrong, and also shows flagrant ignorance about this business. And you would have to be a complete clown to think that artificial intelligence technology is a negative for Pro Medicus.
If you don't own this stock and it's one that you sort of, wanted to own, we know how good this business is, that's a valuation where I don't think it's crazy excessive anymore. I sort of look at that EBIT level, about 70 times, growing at 30%. You're only talking about 3 years where that comes down to a level that's basically a market rate for that sort of business. So if I ask myself, do I think Pro Medicus is still a great business in 3 years, growing at these sorts of 20-30% rates? I think so. Okay. And so I agree. I think you're not buying it all at once, but I think nibble zone.
So let's now turn to the corporate stories, and Westpac hitting a record high on a profit beat, upbeat credit demand outlook. I said a record high. It has since come off, but this was an intraday record that we saw there. GQG Partners logging its best day in 2.5 months as annual profit rises. Cochlear, that's logged its worst day in nearly 6 years on flagging full year earnings at the lower end of its outlook. Webjet saying it ceased discussions with Helloworld and BGH Capital over a takeover bid. Austral shares there substantially lower after the company said it double counted some incentive revenue for the year. Let's now catch up with AMP's Head of Investment Strategy and Chief Economist, Shane Oliver. Shane, welcome as we wrap up the week that was. Now we're seeing that continued rotation out of tech. I've seen the headlines today, AI panic, essentially, that the market continues to sell these stocks down. I mean, do you feel as though this is being overdone, or is any of this justified?
Oh, look, I think it's understandable that we're seeing these sorts of concerns, and we've been seeing them on and off now for the last year with DeepSeek. Back in February last year, the market then recovers from that, and then along the way we've had various similar setbacks. And then, of course, the market goes on to new highs and forgets about it till the next one. I suspect that this goes on for a little bit longer, although when you look at graphs showing the S&P 500, it does seem to be losing a bit of momentum. Each downswing brings it back to within support. It then has a bounce, but it only makes a marginal new high. That does concern me a little bit, that the concerns about tech are getting more and more intense. And they broadened somewhat. It used to just be about AI stock valuations, broader tech valuations. Now, of course, it's about the disruption potentially being caused by AI. And of course, that was seen last week with Anthropic's Claude and concerns that it will disrupt lots of other software companies. And overnight, there was concern that it would disrupt lots of companies generally, including real estate and so on. So I think it's just the market trying to work out what this all means, where it's going to end up, and this could go on for a while yet. I guess an optimistic view would be we're just going to see rotation to the rest of the market. If you look at the equal weighted S&P 500, it's well and truly outperforming so far year to date, up 4.5% versus the market cap weighted S&P 500, which is down 0.2%. And likewise, when you look at Japanese shares, European shares, even Australian shares, they're up year to date, whereas the US market is flat to down slightly. So that rotation is occurring. The question is whether that rotation will be strong enough to offset any weakness you get from tech throughout the year. And that's, I think, a source of uncertainty. Ultimately, we think it will turn out okay, but it does mean we're probably in for a bit more of a volatile ride, a bit more uncertainty this year than we perhaps saw last year, and certainly more than we saw in 2024.
Shane, we did hit a record high for the ASX earlier this week. How are you seeing the Australian share market? And obviously this is the midst now of earnings season. What's your takeout been from what you've seen so far?
Look, I think it's okay. We're only 20% of the way into the reporting season. It will ramp up dramatically next week with 80 major stocks reporting, and then another 80 the week after. So it's early days yet. So far, I think the results have been okay. And of course, bank results were pretty good, but also very mixed. Look at Nick Scali today, good results, profits up strongly, and then the market, when I last looked, was down heavily for Nick Scali, as if a lot of the good news had been factored in. So I think that's probably a factor here. When you look at the PE for the Aussie share market, the forward PE is around close to 20 times, I think 19.7 probably after today's fall, thereabouts. But that's well above norms of around 15 times. And when you look at the bond yield of 4.7% and subtract the earnings yield, which is the inverse of the PE I just referred to, compare it to the bond yields, you end up with a very, very low risk premium, almost as low as it is in the US, in fact, slightly lower on my calculation. So shares are offering a very low risk premium over bonds, and you do wonder whether the market's got ahead of itself, just as it had back in October last year when it first hit these highs that we saw yesterday. So that to me is a bit of a concern, that the market is a little bit stretched from a valuation perspective. You've also got these concerns about the RBA, and of course through the week we've seen several RBA officials, including the governor and the deputy governor, imply or virtually say that there might be more rate hikes if inflation doesn't come down, that inflation's too high, that the NAIRU is maybe higher than they previously thought it was. That's the non-accelerating inflation rate of unemployment. All those sorts of things sort of give you this hawkish monetary backdrop for the market. That said, I do think profits are on the rise. We are going to see profits up this year by 10, 12%. That I think will support the market. It's just, and I'm hopeful that the Reserve won't have to raise interest rates again, because when you look at the NAB final price surveys that came out in the last week, business survey generally within that final prices, they're suggesting maybe the RBA can hold off. But again, it's going to be a volatile ride, I think, as the year progresses. But if those profit numbers come through as we expect, then I think that ultimately supports the market. So we end up with a good year, but it's not going to be, shooting the lights out.
Shane, you mentioned those that read on business conditions. They do appear to be holding up, but post that rate hike we got from the RBA last week, consumer confidence has taken a big dip lower. How concerning is that?
Well, that's certainly a concern. We saw a good pickup in household spending. The numbers earlier in the week up 5% over the last year. And it looks like a strong quarter if you look at volumes for the December quarter. So well and good. And that's reflecting the rate cuts that we started to see a year ago. Now, of course, though, when you look at the numbers for December, not quite so strong. I mean, most people would put that down to the absence of big discounting events or sporting events, all those sorts of things that boosted spending earlier in the quarter. But you have seen that loss of momentum. And then when you look at consumer confidence, which fell in December, November and now February, that is warning that consumers are still a little bit stretched. You can see it in the news regarding barbecues galore going into administration. And you can trace it through in a few retailers over the last few years, that what's happening here is that Australian households are still under some pressure. They're still very much cost or price conscious, and so they hang out for the sales, the Black Friday, whatever it is, end of financial year. And of course, rather than shop in the specialty stores, they go to the Bunnings, where you can buy a cheap barbecue relative to what you might have paid a few years ago, and when you would have gone to barbecues galore. So those pressures are certainly there. So yes, we've seen a pickup as people got optimistic with the rate cuts and so on, but there's some question marks about how sustainable that will be. And I suspect that it's going to remain relatively constrained. We're not going to see consumers dramatically boosting their spending out there. I think it's going to be more constrained, and the consumer confidence figures are a guide to that.
Now, Shane, confidence among those sitting on the opposition benches in Canberra has been at a very low ebb. Now, today, of course, we did have a notable event with a new opposition leader. It's often said a weak opposition leads to a weak and unaccountable government. I mean, how much attention should they be paying to what's going on there in Canberra?
Well, they should be keeping an eye on it. I don't think it has major implications in the near term, because the last election was less than a year ago, so the next one is more than 2 years away. The government has a huge majority, so even if they give up some of that, they'll probably stay in there for another 3 years. So it's 5 years away before it has an impact. But what you refer in terms of terms of change of government, but I guess what you're referring to is, oppositions are important in keeping government to account. We have now a weakened opposition, so that obviously is a bit of a concern. I guess one thing I also worry about in Australia is that so far we've managed to avoid the shift towards populism and extreme polarity in political views that have sort of marred situations in parts of Europe, France, obviously, Germany with the AfD, UK with Reform UK and the Brexit debacle and that sort of stuff, and the US, obviously, under Donald Trump, where the two major parties have become more polarised. You sort of wonder whether maybe that will start to become an issue in Australia, with a lot of the votes that might have gone to the coalition going to One Nation. Susan Ley has said that she will resign from Parliament, or that's what I've seen in the headlines anyways. That means a by-election. One Nation will obviously contest that. And so you sort of wonder whether we might go down that same populist, polarised path that you're seeing in other countries. And unfortunately, when you see that, it does make you question the quality of economic policy making, and that sort of worries me in a longer term sense. But right here, right now, we've got a moderate centre-left government firmly entrenched, and they'll probably be there for a while yet. But obviously there are these concerns that Australia might go down that populist, more extreme policy-making path that you're starting to see to some degree in other countries, and that would be a concern from a longer-term perspective.
Shane, great to get the wrap of the week, as we always do with you. Enjoy your weekend. Thanks for joining us on AMP.
Thanks, Andrew.
All right, now let's just catch up with the leaders and laggards in today's trade. Now, as I said, we don't have any graphics at the moment, but in fact, there we go. We managed to pull something up for you. So AMP making a bit of a comeback after being sold down heavily yesterday after further disappointing results from it. GQG out with some positive numbers today. That's been reflected in its share price. Origin and some of the REITs in the green today, whereas those having fallen, Austell hit hard. That's out of some accounting discrepancies that's emerged from the company. Scali, we were talking about the retailers. It's certainly been under pressure, having perceived to have missed in terms of its result today. Cochlear similarly disappointing the market, down some 18%. And Life 360 among those tech stocks that continue to suffer from that tech sell-off that we're seeing at the moment. All right, let's catch up with what's on overnight. Now, importantly, we do get that read on US CPI that has been delayed, so that will be fascinating just in terms of giving us some light as to what the Fed is likely to do next. We also get further earnings out of the States as well. Now, next week, we get a rates decision from the Reserve Bank of New Zealand. Also, later in the week, we get some employment data here. Also, the FOMC meeting minutes. And among those companies reporting next week, it is a big week, as Shane just referred to there. Among them, BHP, Treasury Wine, NAB, Brambles, Rio Tinto, Wesfarmers, Guzman and Gomez also on that list. All right, let's recap where we're at on the local market then. As mentioned, Black Friday, Friday the 13th, and that's reflected on the market. We're down around 1 1/3% on the ASX, sitting at around 8,920 points. That is the COB. Thanks for watching and listening.